Good morning, everyone. If you can hear me, please type in the chat so I know that you can hear me. Today is October 25th, Tuesday, and we are going to take a moment to read these disclaimers. These disclaimers are very important because everything that we do is for educational purposes only. I want to make sure that you understand we're not financial advisors. We do not provide any financial advice. Read the disclaimer even if you need to stop it. And let me now just highlight the place where you can get in touch with me. Here's an email address that I have on file. Good morning, Joe. It's good to see you. And you can send me an email if you have any questions. And what I would like to do this morning, show you a website where you can find all the trades that we have done since the last meeting, right? So this website is the one that I just showed you, www.com, tradingwithunfilledorders.com/Josip. And when you scroll down here, you would see all the trades that we have done. So last time we actually did the broken wing butterfly. And this particular broken wing butterfly has shown what has happened at the end versus what has happened at the beginning. When we were entering, we were actually targeting the top part over here, and at the end it actually ended up going there. So we have a breakdown of all the broken wing pieces. Good morning, Mark, good to see you, and all the explanation how everything has worked out. So what I was about to do this morning is simply go over some of the most important things that you need to know when you're trading. And one thing that you need to know when you're trading is what the market is currently doing. So we have here our platform that is showing the S&P 500, but I will start with the SPY, which I like to call mother of all products because actually it tracks the S&P 500. So as you can see, we had a shock. We broke out of this range of the 3,800 on the SPX, right? Which is $380 on a SPY. But if I alter this slightly from a 55 minutes, that shows this huge gap between where we closed yesterday being Monday and today being Tuesday, and switch to the daily, you're going to actually get a little bit of different picture here. So let me just click on a daily. So we've been stuck in this range virtually for over a month. And what I mean by that, let me just put the right tool on here. So I'm going to have tools that I can box this, and let's make it in blue. We've been stuck for over a month in this box that is basically between 3800 on S&P, which is a 380, and about the 36 or 360 on SPY. And of course, we had the one little outlier here, and that was a huge day because we have gone down and then we had what I call rip your face rally, and this move is about the 200 points of the S&P to the upside. And as of now, it's showing that we are actually above that range. So the key question that you need to ask yourself when you're looking at this is it sustainable? Is it sustainable? Could it be that by the end of the day, I'm bringing FinViz here in a picture, we actually end up coming right back down? Is that a possibility? It is a possibility, but right now there's something out there that is called shock and awe. And what the shock and awe is when unexpected things happen. Nothing has changed between now and yesterday or a day before or weekend. We still have all the economic issues, socio-political issues around the world, and this thing is just acting strong. So if we know that this is a dangerous area to be, what can we do then this morning? Well, first of all, we do not want to trade against the market. We want to trade with the market, but we want to be very selective at looking some of the stocks, like for instance, Target, because we are now going into the Christmas rally, what they call, right? Like, so when you pull up the target, like you're looking here at the trend that has been broken to the upside. So that's going to be the one particular thing. But I shopped at Costco, and I like to look at the Costco because the Costco is a little bigger beast, and it has also uh, broken above this downtrend that we have been. So over here, we can also do the same thing that I did earlier on S&P 500, like making a claim that we've been here in some kind of box for a prolonged period of time, and now we're at the upper edge of that box. So having said that, I would like to consider some of the trades on Costco. And the way how we do that is that we pull up the chart of the Costco, and we're looking at these levels of resistance, but I also want to look at the levels of support. So what is interesting here is that we have here levels that are very far apart in terms of the downside. So in terms of the downside, we have 443 as a possible level to the downside. So let me just record this. That T COST has basically support at 443, right? And also, I want to make sure that when we go into this thing, we don't look at just 443 to the downside. We also need to look at it to the upside, because we might actually consider something like a credit spread financing my my debit spread. But it's very important that we actually look at at um, option chain to see where the activity is. So one of the best way to do that is that you simply add a study to the daily chart of a proprietary tool, which is option value map. And when you're getting the option value map, you can choose between a contract volume and actually open interest. So I'm going to switch to the open interest. Right now it says a strike above, strike below. I can actually ask for all. So there's going to be a lot of information. Just be aware of it when I'm pulling it up. And I'm going to then simply click OK and apply it. So here we have a plenty of activities, and I would need to actually stretch this so you would be able to see it. And then I'm going to eliminate some of the things. So what is interesting right here, that just before the upper part of this green unfilled order on the bullish side, we have a lot of activity, and that activity is of the 445 on the put side. So let me just report this right here. So if you know that Costco has a support at 443 and a lot of activity on a 445 put side, we need to see what is a premium on that particular product. So what I'm doing right now, I'm pulling up the Costco. I'm going regular November option, because that's what I pull up. And we need to add a little bit more, because over here we are stopping at 455. So I would need to ask, let's say 40 strike prices, so I can see the whole activity. 450 volume. Okay, let's switch to the open interest and the volume, so we would have the activity for the volume and open interest. And something is off here, so let me just see here what is going on here. So we're looking at this. Where is this volume? Just give me 1 second here, because this seems to me that it's showing the activity on the put side of the call and put being $2.88 for that particular cycle that I've selected. So just one single moment here. I want to make sure that we have this done correctly. $2.88 for the Call side. Just 1 second. Usually it doesn't take long for me to determine. Oh, on the put side. No wonder my eyes went on the call side. I apologize. I apologize. My eyes went to the call side when I need to look at the put side. And that was a regular November. So it was a regular November, and there's that activity that I was pointing out to you. Let me just put the square around it, and I'm going to use a red for a put, because it's kind of like more obvious. So there is that $2.88, and that was sold on a bid of that 445 put. And even today we have activity of the 73 cents, and over here it's this thing that is hugely poking your eyes. Now, be aware of it. If you are about to go ahead and a Costco is currently trading at basically, let's round this up to 496. At 496, and I'll now spell out everything that I have in mind here, so there's no confusion here. So 496, where the current price is. So obviously, this activity at 445 put, that it's offering me the premium of the $2.88 is significant, but be aware of it. For me to sell to open, that 445 is gonna be costing me $44,000. That's a lot of money. Now you might say, well, it's a safe and all this type of thing, and I'm getting, if I sell that put, a credit of the $288 there for, this is all nice and dandy, and you can say, like, if I click here on a sell that particular single and I go over here, it's gonna ask me for the resulting buying power of this much. So just be aware of it. That's not what we want to do. We want to use a spread. So if I can have a spread that makes sense, I want to make sure that you understand the logic. I anticipate the price action, even if it comes down, not to go below this level. Not to go below this level. So now I'm going to look, is there a way that I can have what I like to call a credit spread that is going to finance some of my activity to the upside? If that makes sense, feel free to type it in. Jeff, good to see you. I'm glad you're here. I'm going to now one more time use the FinViz just to kind of point out to you that on the FinViz we have a market that is up. But this is the thing. It gapped up, it went up, and now it's just holding, waiting for some next news. And what can that next news be? Well, the next news, and this is just slightly off the topic, I'm going to go here to the Forex Factory calendar, can come this week. So be aware of it. Consumer confidence came out negative. This is not a good news. Be aware of it. You would expect the market to go down, because why would even traders care when something like this happens? So it's a measurement of the financial confidence. So be aware of it. That news was bad because the number was worse than forecasted. And if you're looking this before the market opened, you would anticipate that would cause the market to go down. But no, they were earnings. Okay, so it's earnings that have caused the price to go up. So if I now look at it, what other red flag event do we have? We have a new home sales, which is going to be relevant to the builder, but not to our Costco trade. Not to our Costco trade. So let's now look at it. What is then coming up on Thursday? And we do have an advanced GDP. Now, if you're not sure how to look this up, right? So you hit this button right here. You're probably now overwhelmed when you hit this button because you probably have all the currency. What I have done, I have clicked none, and then I have just checked in the US. And under the expected impact, I don't want to look at the non-economic information. I don't want to look at the low impact. I just want to look at the red flag event, and I usually don't even touch any of these event types, whether it's about inflation, employment, or any of this. So once when I apply that filter, then from all the things that could be there besides the US dollar, I just focus on the red. So advanced GDP is very important to us, and here it spells out why the traders care, because it's a measure, And more important than a measure, it's the broadest measure of the economic activity. So reason why I'm looking at the Costco this morning rather than any other thing, because the chart that we have here is showing to me that we have broken out of this downtrend. We have consolidated. We were in this box, as I have pointed out to you, in S&P evaluation that we just had a few minutes ago. It was just like S&P. It was stuck, unable to take this high that I have drawn right there, and it was in this box with the outlier on the same day when the S&P cracked to the downside, and then it violently came back up. And what I like actually on a FinViz, if you're not really good at drawing the technical lines, FinViz does it for you. It connects the lowest possible of that May with this another low, so you know that we are creating what kind of low? Higher lows. And over here we had this moving average that was pushing us to the downside, and now we ripped to the upside. Well, you can say like, well, it's maybe due to the earnings. Now just be aware of it. Earnings were a month ago in September, AMC in aftermarket close. This wasn't about the earnings. This was break outside of this thing. So now the question becomes, where can we go? So now that I know what I have on the downside, and I'm going to probably use a bull put spread, I want to make sure that I revisit one more time the chart of the Costco. And for all the practical purposes, I'm going to still stick to the same monthly to look at the highest activity on a call side. Right there at the round number, around the 500. And we are right now very close to it. We are at 496. We have a lot of call activity. A lot of call activity. Now, of course, we can see that in a moment here when we focus correctly on a call side rather than earlier when I looked at the call side. And we see this huge activity. And I'm showing both the volume as well as the open interest. And I would say that this is quite significant. We have a 245 contracts, and we have an open interest that's been existing even before the market has opened of the 926. So there's a high chance that this number can become over 1,000. If I look at any higher, I would not see 4 digits. Now this most likely is going to be 4 digits. So what the market maker is saying to us at this particular point in time. Okay. I'm going to now type this because I want to make sure that I break this down and I explain it properly, and do not confuse you, because not too many people in the industry talk about the expected move, because people are like, what in the world is expected move? Well, expected move. Okay, so we know we have a support here at the 443. We know that we can actually go ahead and trade 40-45 put, whether we have enough money to do this as a selling of the put, or we have that activity as a simple kind of spread, like a vertical spread. Expected move is nothing else but when you add at the money, and I'm going to use the word ask price of the call with at the money ask price of the put. So when we're looking right here, and you would see the white stuff here represents out of the moneyness on a put, and the white stuff over here represents out of the moneyness on a call. We are currently sitting at 496. So now, doesn't matter which one you look at. Let's say I look at the 495 put, just for simplicity's sake, 495 put at the ask side. It has a value right now, and maybe I'm gonna create a little box below it because I find that usually works the best. So we are looking at the put here, And we're looking here at call here. So 495 call currently, when I took the snapshot, is trading for $16.80, while on the put side, the same put is trading for a 15.50. So when you add up these two numbers quickly together, right? So you take a $16.80 and you add 15.55, you get $32.35. Okay, so that's the expected move. I should put MN in front of it. That means market makers who are pricing this option market, they expect in a month of November, okay, and we're talking about a November regular option, right? Expected move of the $32.35. Now be aware of it. What I'm doing right now, I am subtracting from 496 that put level at 445. And I notice that my put, this activity of the put, is away from the current price in amount of 51 points. So I will now, I can't suggest we are not providing any financial advice or any of this thing. I would now entertain the possibility of doing the bull put spread. And this bull put spread is going to be for November, as I mentioned to you, is going to be selling of the, we had it right here. Okay, there it is. Selling of this one, for 299, 440, 299. But we need to also, so if we are selling to open this one, we also need to buy to open, also November, lower strike price. Now this lower strike price, we didn't yet price. So let's now pull up our option chain over here. So we're pulling up the option chain for a Costco. We're right away focusing on editing the spread for a November. And we're going to add one more like here because we know exactly what we are doing. We are selling. And let's put this at so we have only $5 increment. Below the 445, you only have a $5 increments. See? And when we switch this to the put and a put, how much premium can we bring in? We can bring in a 48 cents. Now be aware of it, this is a 48 cents not on a $1 risk. This is a 48 cents on a $5 of risk. On the $5 of risk. So let me just now make sure that I put all this in, and I will be considering actually putting this right away inside my sheet there, so it would be less confusing. So when you're looking at this, the way how I cut this, you don't have information how much are we actually risking. Well, you can actually find that out very easily by simply clicking here, risk graph. And when a risk graph populates, this is where instantly your eyes should go. And I said instantly your eyes should go there for a simple reason. You see now my maximum profit just changed to the 46. Now it's 45. Now it's dancing. Now it really doesn't match exactly. You know what I'm going to do? I'm going to fire this trade in, because when I fire this trade in a paper trading account, so over here we have enough capital to do this. The count is over $10,000. We have a $5 spread. We're single right clicking on a sell, and we're going to select the vertical. We're going to make sure that it's just 1 and 1. So 445 is being sold, therefore there's a minus sign. 440 is being bought for a 48 cents, 49 cents. Let's send it in, see if it's going to get filled. Since then, the price has moved even lower. You see, now it's exactly sitting at 492, 495.02. And what I have in the notes is already wrong. So it's already wrong because over here I had a 4906. Okay, so let's just put it here at 40. Yeah, I mean, you can put 2 cents if it's going to really make you happy, but it doesn't matter. I want to get filled on this before I proceed with any mathematics. Oh, now it's dropping. Oh, maybe the whole market is dropping. Could it be that whole market is dropping? Oh, but then why are you doing the bull put? No, actually, the market is still. And by the way, this is a real time. You can check your time and observe right now it's 25 minutes after an hour. So this is definitely going higher, but somehow the Costco is pulling back. Let me see if I got filled. Did I get filled? No, it's still working. You know what? I'll just drop this, because I do want to teach this lesson, like rather than wait here 2 minutes till it's going to get filled. So this is cancel. So usually when I trade with the live money, I wait for 2 minutes because there's 7 exchanges that are looking at this, and I want to know how many of these exchanges want that. So over here, when you have a letter T or C, you can click on it. So there it is. Kansas is there, Chicago is there, Philadelphia Exchange, of course, Chicago, New York, Intercontinental Exchange. These are 7 option exchanges that are currently looking at my order to fill at 48 cents. They're not giving it to me. Let's get rolling here. I really need to teach this. I don't want to wait for this. Okay, so this is not filled. This is just said cancel and replacing. Again, normally I would wait for 2 minutes. I'm going to go lower, 46. I normally don't go anything below 45 on this kind of situation because I'm risking $455 for that 40. But you see, the market is dropping. That's what is going on. The market is dropping. Could you move the strike price higher? No, because if I move my strike price higher, could I get patient? That's the probably better question you should ask rather than say like, could you move the strike price? Do not chase the price. Please do not chase the price. What you can simply do, you can actually revisit how this whole thing looks and ask yourself why I do not wanna. Okay, I'm gonna remove that study option volume, so I can look at this. Why I do not want to compromise this, because 443 is what I like to call my line in the sand. And let's make this into blue so it's a little bit. So if 445 is my line in the sand below which one I don't want to go, what other choices should I pick? If I go ahead and I pick now selling on the what? 440, what would I need to then buy to protect myself? 435. If I can't get 45 cents for the higher one, what I'm gonna get for the lower one? 25 cents and risk like basically $475. It just doesn't make sense. I need to get filled on that thing, and somehow they're just not giving it. Oh, why did you move the cycle? Well, that's another possibility. If I would move the cycle, what is then really happening? Then we are really going into the Santa Claus rally, and it's a completely different situation. I'm going to revisit this one more time and see if I got filled. Yes, I got filled. Now I have information, and now I can actually do this thing properly. So just give me 1 second here, because I do want to make sure that I have everything correct here, and you can actually track it on your end. So I'm accessing my Zoho sheet. It's recent right here, live sessions. So as I'm doing this, you're gonna be able to actually interact or copy and paste in your own documents, everything that I'm doing. So what I'm doing right here, I'm creating a row above, and it's in this row that I'm going to be putting the screenshot of the thinkorswim of this particular trade. So this particular trade that I'm selecting is going to go directly in the Zoho sheet. Be aware of it. I normally, this is what I prefer to do, like after the session, I would add a text. But right now, you would have already all the information that you need to have in that Zoho sheet. So although I can put the mouse here and dump it in, no, it's a server error. You know what? I'm so sorry. I was trying to do something thinking you would have access to it instantly, but I stand corrected. Therefore, I just need to do the old-fashioned way, and once when everything is uh, is done, then we can actually proceed. So once when the session is done, I'm going to import these things and everything. Okay, so over here I got the 45 cents. Therefore, I need to alter these numbers because these numbers obviously are wrong. And I am going back to the existing spread here that we have. And this existing spread, based on the information that I currently got filled, needs to be altered. And that's easy to do. So you just click here, edit spread. You switch this to the fill price. My 444 got filled for $2.99, which is way better than what it was before. Remember when we checked it out before, it was at 288. Now it's at 299. That's good. Now what I hate, when I actually sell this for basically $300, I need to give them back 254. That's what really is displeasing to me. That's what really. And now when you look at this graph, you are risking a heck of a lot of money for small little credit. Yes, but had you just placed this as a, I don't want to call it naked, but as a cash secure put, right? Had you placed this, look for a single cell of that. Now it's changed to even 285, so we should be happy at the amount that we have gotten. You would need way more capital. You would need thousands of dollars. Now be aware of it. If you need the thousands of dollars, but your account, and in this case, I purposely reset this account to be at $10,000 to something that attendees can relate to, rather than looking at, oh, in order for me to place this, I need to have $44,000. Well, you can't because you don't even have here enough to do this. So just be aware of it. I know it's expensive, but it could have been even more expensive. And in that case, you can even start looking like, well, what's my rate of return on that? Well, how do we figure out the rate of return? So let's now divide. If you had that amount of money, that you received $285 right now on an investment of the 44,215, in terms of the percentages, even when you multiply it by 100, because that gives you 10%, what are you getting? 0.6%. Yeah, but you need to wait for it so many days to get it. Okay? Versus our trade that we have right now. On our trade that we have here, and let me just make sure that I snapshot this correctly. So we have this correct at this amount. And I want to make sure that I put it in where it should go. And also, I want to make sure that your eyes go straight to the maximum risk. So my maximum risk, do not focus on the money that you can make. Money takes care of itself. Focus on how much are you risking in this particular trade. You are risking $455 to make 45. So that is what, in terms of the percentage, way, way better than what we had if we did the cash secure put. Well, I still lost you. I don't follow you. You're moving too fast this morning. Could you slow down and tell me, how did you get those two numbers? Okay, so out of the $500 spread, I got paid by the broker, by the market maker, by the other side, whoever took my trade, $45. But I'm risking 455. So when you multiply this by 100 in order to find percent meaning 100, This is almost 10%. Well, yeah, you need to subtract the commission and all this type of thing. But go back to the chart. Okay, let's just go back to the chart. Okay, so look where we are. We are dancing around the 495. Okay, and you are telling the market maker you're willing to buy because that's what the selling of the put is. You're taking obligation to buy at 445. And are you alone on that level? Are you alone? Or are there other institutions there? And I said institutions. Because just think about it. There's a 4,636 open interest contract that have taken the obligation to buy at that level. Yeah, out of that, maybe 1,552 are actually hedged with the lower unit, just like we did. You know, Jeff, how do you get filled for 70 cents? I don't get. Did you trade in November or did you trade in December? I don't know. Maybe you accidentally click on the December. I mean, let me show you how quickly you can change this. Okay, so what I'm doing here, I create a duplicate order. And what I'm doing right now, I'm just now switching here to December. And the 16th is exactly the December. Yeah, I think that's what most likely happened, that you got filled for a December. Yeah, we can just fire it in here and see if I'm getting filled. You see, they're not giving me. Jeff, I think you got filled on the 70 cents for a December. Yeah, because my buying power effect is at $500. And out of that $500, if you want, I can just go over here in the cash. So you would see exactly what is happening here with the cash. Cash at the beginning of the day, after I got filled, the things change. Oh, that's 2 days back. I'm sorry. I need to reset this. There it is. Okay, so just watch this. Okay, if you can just focus on this area right here. Actually, you don't need to even focus. What I'm going to do, I'm going to snapshot this. I'm going to just snapshot this and put it in a Word document here and make sure that later on I import all these documents in it. So I don't want to be moving too fast. So this account purposely had the value of the $10,000 paper trading account. I went ahead and paid miscellaneous stock exchange fee in a great amount of 3 cents. My commission is 65 cents. I had the two contracts. One is the one that I bought, one is the one that I sold, and that 65 cents becomes $1.30. They owe me 45, right? You know, and then they subtract from that. So my net balance has gone up in amount of that. But the more important than that, you need to look at the chart and ask yourself, do you feel comfortable with that trade? So now that you have that $45, you can ask yourself, okay, what can I do with that if I'm still bullish on the physical underlying? If you're still bullish on a physical underlying, which is a Costco, right? And we are going higher. This is a real shock and awe. This is a real shock and awe. You see, what I usually do when I trade, I actually draw the line at the high of each of these things. So this was actually 11, and this would be also 11. That red bar should be your focus because it's easy to see. And when all of three major markets take up the high, then this is no longer gap and hold. This is now gap and what? Go. So in this case, there's a high possibility that today we're gonna close in green territory, and we are proceeding, and we are picking up the stock that we all have shopped at before. We know how busy they can get, especially going into the Christmas, right? So I'm done with the bull put side. I'm now entertaining the possibility of the shorter term bull call spread. So that probably shocked you. Wow, what do you mean by that? Okay, let me just now run it one more time here. I have gotten this money for a November, but if I open up here and let's reduce it to only 14 strike prices, You see, I like when they have it for a 250. You see over here they have a 250 increment, 250 increment, 250 increment. And then when you get to this area, and let me just change this into orange so your eyes are going to be more accustomed to it. You see how it's no more 250? Nor it's here no more 250? Nor it's... So why would the market maker do that? Okay, let's go back to the expected move. If I taught you anything today that is valuable, anything today that should stand out, that all that you need to do is add at the money, ask and call to find out what is a market maker expected move. So we know what the market maker expected move is here, ladies and gentlemen, for November. But how about if I want to look at the market maker expected move for the current cycle? For the current cycle, what do we do then? Let's drop it again to nothing. We're still sticking to 495. Well, you can stick for 497.50. Why should I when it's out of the money? Because we said it needs to be at the money, hint, 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 at the call side. At the call side. Oh, I'm not following. Okay, let me follow you. Let me help you to follow. I'm switching this to the intrinsic. Okay? So now when I switch this to the intrinsic and take a snapshot again, take a snapshot again and walking slowly through this one more time. We're now, okay, so let me sum up. Okay? So what I actually summing up is that we have a bull call with the credit of 45 cents. And I should put here November. Okay? So that's what we have. That's just given. Okay? We are now considering, oh, I'm sorry. See, I had a bull call when it's actually bull put. That's good. Now at least I don't need to type it anymore. I'll just put it right here. Sorry about that. Now I'm considering October, and that's going to be a debit. Okay? And we don't know how much is that going to be. But what I need to find out, what is the October market maker expected move? And in order to find this out, I need to do the same thing. I need to simply add up. I didn't take a snapshot. I thought I did. No, I didn't. Okay. Let's do it one more time. Actually, I'm going to put the circles right around what I need to add up. So I need to add up 680 and I need to add up 525. Okay, those are the two things that we need to add up to know for this Friday expiry what the market maker expected move is. And based on that, I'm going to make my decision about which bull call I'm going to see. So if you're following my logic, that's the exactly same way that we had approached the bull put side, right? We looked at the chart, we started with the chart, then we looked at the expected move, and then we saw the distance between the two. So we have a 525 plus 680. So that's about $12 move, okay? So expected move between now and Friday is $12 to the upside, $12 to the downside. So if I know that, and we are sitting at the 495, when I add that $12 to the upside, because I'm considering the bullishness, it's a 507, which we don't have, because remember, we don't have a 507 strike price. Oh, I wish they had those 750s. Then we would have a 507.50, but we don't. So we have a 510. Now 510 is giving me what? $1.30. But don't forget, that's giving you $1.30 if you're selling. But what about the one that you are buying? The one that you are buying is additional 5 points higher, and that's giving you 65 cents. Now be aware of it. That is also the the outlay of the capital that is significant. So if I'm aiming at that level, I should not be doing the bear call spread. I shouldn't. I should not be doing the bear call spread, because if I'm doing the bear call spread, I should let this thing run up to that resistance and then do the bear call spread. But as of now, as the market is rallying, I should wait for it. So now I'm revisiting the chart, and I'm seeing over here on a daily big mumbo jumbo that is saying to me, it's already at the resistance, maybe you can do it. How about if I change this to 55? Because that's then more to what I'm actually looking at. Oh, now I don't see it anything. Well, I see something here, but it's all the way up there. 144. So it definitely has a potential to go. There it is. You see that 547. You look, be aware of it. Market makers need to price this. Do you think they just price this randomly, or they have access to the unfilled orders? Do 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 they have access to the unfilled orders? Take a look at it. These are all the unfilled orders as of now. So if I want to actually type in, just for the heck of it, SPX, ladies and gentlemen, at 8:46, which is right now, there's a trader who has fired this trade, and just like I was waiting there to be filled, this order is waiting here to be filled for $2.50. But that's not what we're looking at. We're looking at Costco. That it is. Somebody about an hour ago has decided to trade the put side, but we're not looking at the put side. We're looking at the what? Call side. Now be aware of it. Once when you get on the 24th, I don't want to consider those trades because they're day old trades. Day old trades. I don't think that's irrelevant. For me, the fastest way to do this is just to click the quantity and to see the biggest players right here. These are the biggest players that are doing this, and you know what? They're doing the bull put, and they're at a different level. They're more aggressive than what we are, and they're at the what? Different month. They're at a different month, but that's not what we're looking. Be aware of it. We're looking at the time, and we're aiming at the November, and there it is. There is somebody who is placing the bet with only single contract that the price is gonna go to 510 and go all the way to 515. Well, could that be uninformed individual? Because informed individual would not try to trade inside of this red unfilled order. So I need to start wrapping up the session with the bull call spread that I personally want for the October 28. For the October 28, so I'm going back to the trade tab. I'm looking at October 28. I want to look at two things, not just the volume, but volume and open interest. Is there a huge volume here that is exciting you? Yes. Now keep in mind you only have a 45 cents. You only have a 45 cents. If you go ahead and buy this for $4.35, would you not prefer that we had here, right here, at this level, would you like that? Feel free to type it in. Because then you would be putting in less than what you are putting now. Because how much are you putting right now? Well, I need to get rid of this, like just to kind of proceed with this. So I'm 500, single right clicking, buying a bull call spread. automatically they fill in the next strike price. Well, I can't change this to 502.50 for a simple reason. It doesn't exist. So what is bothering me here, they only have a 45 cents, but this beast is causing me what? 178. So I'll take it because I'm running out of the time. I need to finish the session in a few moments. I got filled for $1.75. So let's now walk this. Okay? 175 divided by 45 cents that I took, right? I'm sorry. 175 divided by the 45 cents that I took. I would need to do, I already have a one. I would need to do 3 more contracts of the other one in order to finance this one. So be aware of it. My account has now dropped from a 10,000 in amount of the $175 plus this $1.33 of the commission with the miscellaneous fee. I don't like that. I want my money back. Okay, get it. Duplicate order. Make sure that you go into negative territory because now you're going negative. Be aware of it. We are now putting additional $1,500 on. So my buying power is going to go up in amount of 135, but my margin is going to increase. So let's just save this for a second so you guys don't get confused, okay? Do not get confused. You see this 500 right now? I'm going to take a whole snapshot of it. Okay, so there's a 500 right there. I'm going to dump this inside the document here. And I'm going to start concluding the session and taking up a few questions for those of you who have. Okay, so here's my 3 of them. They're waiting to be shipped. So 3 of them, 45 cents. Now it's already moved 42. So, see, I'm talking too much. Oh yeah, because the market is dropping. Remember? No, actually, market lifted. Yeah, if it lifted, then it's further away. So I might not be able to get this at the 45 anymore. Okay, now if you're splitting the pennies, like I just need to get this filled. So then I'm completely financed. Come on, now it's playing with me. Are you gonna give me 41? They're not giving me at 41. But look, as I'm doing this thing and waiting to be filled. Okay, now I'm filled. What happened with my margin? It went up exactly to $2,000. Why would it go exactly for $2,000? Because now I have a not one for 3 contracts that are 5-point wide. Additional $1,500 has come in. Therefore, that's the thing. That's what is going on here. So let's now finish this thing up. So I'm going back here. This is my bull put spread. I'm going to edit this. And I'm going to jack this up to 4 contracts. Why I'm jacking at 4 contracts? Assuming that I have gotten that at the right price, then that's 180. Okay, 180. So let's just now make sure that you follow the bull put spread. The most that this bull put spread can make me is $180, because this is what we have here. Okay, this is a big picture or a summary or conclusion. I have a bull call that involves the strike prices of the 500 and the sold unit at 505, and it cost me $1.75 debit. I should put here 1 contract. Okay, Over here, I have a 4 bull put spreads that involve 445, and then I have to protect myself with 440 put, and I'm dumping it in. It cost me $1.80. So do you see what I did? I made sure that I received more money than what I paid out here. And what is my outcome? What is my hope? What do you think that I'm expecting the market to do? I expect market in the current environment that we are in with the S&P going up to head towards this area. Once when it heads towards that area, and I do have here, let me just make sure that I type it in what I have. I have a long 500 and I sold 505. If we go to that area and the bell rings and it's October 28th, Friday, is my $505 in the money? Yes, it is. So then on that particular trade, I have earned that amount. So let's now make sure that I have information here also of what we did on my bull call spread. So my bull call spread needs to have this information inside the Word document, so I can later on post that for you so you will not get confused. And I'm adding now. Okay, so watch here. I'm gonna edit the spread and I'm gonna add the option leg of the buying, but it's not gonna be 4, it's gonna be option leg of the 1, and the one that I bought is actually 500, and that 500 I have paid for it $4.15. Now, would you agree that's expensive? $4.15 for something that is out of the money. Well, luckily, I actually sold the higher unit. It is supposed to say 500. Why is that saying? Okay, so 500, and that's supposed to say call. And it's supposed to say call. Okay, so let's read this one more time. Okay, so not to get confused. I bought a $500 call for $4.15. I sold 505 for 240. So sold 505 filled price for $2.40. So $2.40. So now when I click this, there it is. It says net you are up $5. How can that be? Oh, okay, just think about it. You're up $5 because over here this is a credit of the $1.80. So when you do the math, $1.80 credit, okay, so conclusion over here, even if wrong, up 5, right? I mean, because that needs to be the case. But, what's my profit on it? What's my profit on it? So I'm gonna now, in a green, circle this thing. And then I'm gonna ask you a question, and feel free to type in the answer. How do you like to make on a credit of the $5, $505? How do you like that? And I'll take a moment for you to do that because we're just about ready to finish. This word maximum risk should actually say margin, and I already have disclosed the margin earlier when I was saying to you, be aware of it here as we are putting more contracts on, right? Additional money is going online. So don't be like, oh, but over here you circle red. Yeah, I circled red because that was a explanation of the one. When we added the three more to it, that it went up in amount of this. So be aware of it. This is the correct math of this whole thing. This is the correct math of this whole thing. Break even strike price, whether it's up and down. That's mean the Costco that is currently trading at basically almost $500, 497.46, would need to drop all the way to 444.96. I mean, visually, can you even picture that this would need to come? And I'll use a red line over here so you kind of visualize how steep the move would need to be in order for this to happen. Okay, you need to come all the way here. But on the way here, do we have an uptrend? Do we have another set of UFOs right here that the buyers are, oh, I just wish when this thing comes to that level to buy. Look at it over here. When this thing crashed back in April and May, did it rip from 400 to 560? I mean, just think about it. It's $160 rip to the upside. Now, us going into Christmas, you're saying to me we can't breed another $3 higher to make my $500 profitable? So just realize, that this is a wonderful trade. On a credit of the 5, you can make additional. Now, again, do you need to monitor? Of course, as long as you're tracking this, you need to be aware of it. What do we trade? So what we traded today was very simple. We traded out of the money, bull call spread, one contract. So we're long one contract. And over here we sold, right? Bull put, right? Still out of the money. But we had to do 4 contracts, in order to get that 45 cents times whatever, or whatever we got filled. Let me read the comment. I like it. Waiting to be filled on the 3 additional bull puts at the higher price. I don't think you're going to be filled at the higher price, because if you look at the way how I did it, Mark, I actually had to lower it. So if you go only over here in a cancel and cancel and cancel, you would notice over here that in my account statement I had a lot of canceled orders, and I didn't get 45, I got 41. So anyway, it's top of the hour. I hope you enjoyed this session. I'm going to work with Jose to figure out what's that glitch in the platform and why we didn't get filled. And I wish you all the best. Jeff, just one more note. I personally wouldn't do this for December. I mean, not that you couldn't do it. You could, but 70 cents waiting all the way for. Let me tell you what is the difference, Jeff. For 70 cents to wait 52 days versus for 45 cents to wait 24 days. I would rather have more contracts on the 24 days than on 52 days, because really, I mean, if you think about it, Jeff, just for 1 second, okay, think about it. For a November, for the same price, we were able to get 45. If you add 45 and 45, that's a 90, right? Now think about it. You went further out in time. You got 70 cents for a December, right? Shouldn't that be more than that? Shouldn't it be at least 80 or 85 for a 90? Because you have an additional month. There's a lot of things that can happen, a lot of bad things that can happen between the November and December. So like the bottom line is I'm financing my front bull call spread with the monthly option. And when this monthly option is gone, November, then I can use again December. And of course, they're going to be inserting the weeklies in between. So, Jeff, I hope that helps. Don't think, December, I'm more conservative. No. I mean, you're conservative in November too. It's just that this thing needs to do what it needs to do. So I hope I didn't overstay my welcome. I wish you all the best, and I'll see you, I guess, next month. Bye bye.